what I will do is I will shut down everything on Canvas except for the quizzes, and then when you go over to the lab, do not log into Lockdown browser. There will be an icon for me on your computer, and going down because you're going to go into Canvas just like you ordinarily do. The only thing is when you go in there, all you will see are the quizzes. Okay, so I'll keep reminding you that every day, but what I'm getting at is be reminded that as of Wednesday afternoon, right after class, I'm going to close down Canvas, so if you want to get homework solutions or anything like that off there, you need to do it before then, okay? And I think that's it. I thought there was, I posted another video this morning on array functions, which we're going to talk about here after a few minutes, but I posted that on there, so I think they're pretty cool functions. I don't use them as much as I should. They're very efficient, but we'll see that in a few minutes. So, questions about anything before we continue? Questions? Okay. We've been talking about financial statements. Of course, the importance of financial statements is the more you know about how they're put together, the better able you should be to analyze those financial statements in a search for value. One of the things that I had mentioned to you was the potential new IFRS rules that are coming out. This is international standards, which I think are, can I use the word stupid? What do you guys think about me? On a number of levels. Okay, one of which is this fair market value accounting stuff. I have given you my opinion on that. Justin went and did a little research on it. I suppose he's particularly interested in it, but he did a little research on it, and I asked him to share with you what he found. And that was where? Well, just the report that you read to me.
From Douglas Carmichael's art library for auditing class.
You didn't tell me that part.
He's the, for those who don't know, he is the first chief of the PCAOB. He states when fair value information is based on a model that incorporates management intent rather than being based on objectively verifiable market prices, there's a serious risk of arousing unjustified expectations. This possibility should be a concern to all those involved in the financial reporting process.
And I would extend that one step further and say that the concern not only those involved in the financial reporting process, but also the financial statement interpretation process, which is you guys. Okay, because I think this is something that's important. Obviously, for anybody relying on financial statements, it's important to understand this. But I think particularly you guys, because you guys are the ones that are potentially going to have to deal with this in the real world, 4, 5, 6 years from now, assuming it's implemented then. Okay, and also Atlanta had brought up a couple of good points about you were talking about what, inflation? I don't remember exactly what you were saying.
In any case, it's going to happen something. They have to have some rules to calculate, but even if the currency are devaluating or they have a denomination. Yeah,
well, and we were talking about, you know, some fair market value accounting during inflationary periods versus deflationary periods. What are you going to do? I guess get appraisers come out every year? An appraiser, I guess that's what you're going to do? Okay, so my point isn't to provide a solid answer. My point is issue identification and make you guys aware that it appears to me that this is something you guys are going to have to be dealing with early to mid in your career. So you might want to give it some thought ahead of time. And if you ever get on the FASB board or something, tell them that your old financial models professor has an opinion on this. So ask them to give me a call. They're probably not going to listen to me, but at least we'll take a shot at it. Okay, so that's a little context of what we're doing here. We had started putting together financial statements yesterday. We had, if I remember correctly, we had finished the balance sheet and income statement. I have all this posted on Canvas, and I didn't make it clear yesterday, but if you scroll over to the right, then that's where the answers are for all this. So the left is the problem. And scrolling over to the right is where the answers are, and just an Excel trick in case you're not aware of it, using your tab key, it's not cap locks, using your tab key is a good way to scroll back and forth. okay? And so, I told you before that in fact, I think I'm the only one that I know of that actually uses that little Lotus Transition Navigation key. But I always click on that, and what that does is enable me to use the tab just like the page down. You know, so page down, you're going like this, tab, you're going across like this, the same way. In fact, I have a video posted of that as well. So anyhow, we stopped yesterday with the balance sheet and income statement. Questions about that? Questions about that? We went home and looked at it yesterday afternoon, or last night and this morning, last night or this morning. Questions? Okay, then let's move to the statement of cash flow. Statement of cash flow, like I told you, is actually kind of a complicated statement. I showed, we were looking at the McDonald's statement of cash flow yesterday, so we looked at the kind of basic layout. A review of that, the basic layout of it is in what, 3 sections? Operating, investing, financing. For some reason, way back when I was on your side of the desk taking Financial Accounting 1, which is what it was called at that time, I always remembered OIF. That was just one of those things that was always stuck in my brain, so I've remembered it ever since. So OIF, operating, investing, and financing activities. Operating section is basically going to consist of changes in the working capital, current assets and current liabilities. Investing will be basically changes in the long-term assets. And then financing would be long-term debt and equity. Long-term debt and equity. Okay, so again, this is what you can expect on the exam. Given some data, you'll be given some instructions, prepare a balance sheet, income statement of cash flows. That'll take you a few minutes. You go to the quiz, answer 4 or 5 questions on what you just did, and continue moving on. On Monday, I should have either Monday or Tuesday, but probably Monday. I'll try and post that example exam. So I have just a couple, I think I have like 5 questions or something on there. It's not intended as a review of the material. It's intended as an example of what you can expect in terms of how the exam will be administered. Okay, so you can pull up the data and answer your questions. So that's all that. Okay. So we'll go ahead and start doing our statement of cash flow. And we have a couple of options here. This is an Excel conversation for a moment. We got the financial statements on one tab, the statement of cash flows on the other, and just clicking back and forth like that would be pretty clumsy. Okay, so one thing we could do is to simply copy and paste the data over. All right, so if we wanted to, okay, we could copy all this and simply paste it over in here somewhere. But we got to be careful because remember, you're copying and pasting formulas. But for this purpose, do you care about the formulas? No. What you're interested in is the values. Okay? So I have a video on this as well. If you right-click, there's a number of shortcuts here, which the more you do it, you'll become familiar with it. But if you click on Paste Special, these are the options that your shortcuts are directing you to. The one that I use really the most is this one right here, where you're posting over, I'm sorry, this one right here, where you're posting over the values and the number formats. Okay? Notice over here you have values and you have formats. So if you click values, then it will paste the result of the formula, but it won't format it the way you have it on the other sheet. If you pick formats, which I never use, I believe it will paste the formats and the formulas, I guess. But the one that I use all the time is this one where it pastes both. So this is the one that will paste both the result of the formula and the format that you had it in before, which makes things cleaner. While I'm on this screen, the other one that I use all the time is this transpose. Okay, what's that do?
Turn your data from column to row.
Right, or vice versa. Okay. All right, so we can do that. All right, and notice again that our formats are the same as what we had over here. Okay, so we could do it that way. Another way to do it, if you go under View and then New Window, what this does is kind of like the cloud. Okay, it brings up the same screen. So if you go to Arrange All and you have several choices here, I'll say vertical for the moment. Okay, what it's doing, this is the same file. Okay, so you can simply put them side by side, and that can be very convenient for filling all this stuff out. Okay, so you can do it either way. If you do it this way, then hitting, I believe it's Control Tab, yeah. Control Tab is what takes you back and forth. Okay, so is everybody on top of this?
How'd you do that? Sorry.
That was, it's under View and then New Window. Thank you for that question. View and New Window, and then your Arrange All is just how you decide how you want it laid out. Okay, so this is vertical. Horizontal would look like that. A cascade is, you know, one behind the other one like this, like a couple of sheets of paper. And then I don't know what tile it is. Well, I guess if you had more than two, I guess that would be like squares, like a tic-tac-toe board. So I will go back to vertical. Other questions? And everybody understands that this is the same file, right? There's 81, so. Everybody with me? Okay, all right. Okay, so whichever way you care to do it is fine by me, because that's one of those things that I can't test. So let's go ahead and start working on our statement of cash flow. What's the first thing we're going to do? Statement of cash flow. What's the first line of the statement of cash flow? Always. Will be net income. Okay, and this is kind of, you know, I imagine you probably run across this somewhere in your finance training where, you know, we're trying to convert a quote-unquote accounting income into cash flow. And where do you start normally? Net income, and then start adjusting back all the non-cash items. So that's exactly what we're doing here. Okay, so start with net income, which would be right here. Then what? Okay, we're going to add back all of our non-cash expenses. The most frequent of which is depreciation. All right, so I'm going to put in negative, and I've got the depreciation right there. Why did I put in a negative? Exactly. Succinctly said, a negative and negative makes a positive. We've got to add this back. Okay. So far, so good? C35.
No, that's bad, isn't it?
Wait a minute. I'm sorry, I'm on the wrong.
Oh,
I beg your pardon.
237?
I beg your pardon. Yeah, we'll change my references here. The depreciation is on AG 36. Okay, what's next? Okay, the depreciation is not our only non-cash item, and that's exactly why I included amortization expense in this example, is to remind you guys that depreciation is not our only non-cash item. We tend to think that's what we do all the time, all right? That's what we talk about in 3403, okay? But senior finance majors, be reminded depreciation is not the only one. That's exactly why I put amortization in there. Okay, so amortization. Okay, anything else? Yeah, we have bad debt expense in here. Is that a non-cash item? Is that a non-cash item?
It is,
Yeah, that's gonna be an estimate, and recall, I won't drag you through all the accounting stuff, but recall we have two ways of estimating bad debt expense. That's a prime, in my view, this is a prime area for some earnings management issues. Prime area, because this is something where I think that you could realistically justify, shall we say, tweaking it from year to year. Right? So again, maybe you really think that 2 to 4% of your receivables are uncollectible. So if you're looking to save on earnings, okay, so you're having a good year, then you might start bumping the estimate up towards 4. Start having some lean years, start bumping the estimate back towards 2. Okay, so I think this is actually a prime area for earnings management. So we could throw bad debt expense in here. I'm not going to do that for the moment, and I'll show you why in just a second. What's next that we want to do? So, well, let me back up. Have we taken care of all of our non-cash items on the income statement? All of the pure non-cash items? Yeah. Cash is king, so it's important to understand non-cash items. Now, are there other non-cash items in here? Even though we can't calculate them exactly, are there potentially other non-cash items in here? What about sales? Looks like it's on your shoulders, Justin. What about sales? Yeah, well, yeah, the step before that is, we certainly can have non-cash items in here because we might probably have some credit sales. So we have sold things and not received it yet, or not, excuse me, not been paid for it yet. Okay. Where's that gonna show up? Accounts receivable, on the balance sheet, more specifically, accounts receivable. Okay, and we could go all down everything and have that same conversation with suppliers that we owe and so forth and so on, and that's why we're adjusting all of these other accounts. Financial statement analysis. Make sense? Okay. All right, so we'll go up here and start adjusting the accounts. I mean, you gotta, at least I do, you gotta think it through every single time, but as soon as you understand which way one section goes, then it's kind of mechanical after that, and you figure it out. If assets go up, then cash is going to go down. So if liabilities go up, then cash will go up. Okay, so it's the opposite. So once you think one of them through, then you can kind of mechanically put everything in. And if that doesn't make sense to you, inventory, generally speaking, if you go out and buy some inventory, of course, an asset is going up, what's your cash going to do? Go down. Okay, so just a thought process there, and I have to do the same thing every time myself. All right, so we'll adjust under the operating section, we'll adjust accounts receivable, but notice, okay, pay attention, exam issue, notice, what's it say? Net accounts receivable. Like I said yesterday, every time you see the word net, pay attention, because this is net of bad debt expense, or more allowance for bad debt, which is why I'm not doing the bad debt expense off of the income statement, because it's already taken into account right here. We could have the same conversation, or at least a similar conversation, with property, plant, and equipment. If the property, plant, and equipment were net, then that would include the depreciation expense from downstairs. That's a little trickier issue, but it'd be the same basic idea. Okay, so that's why I didn't do bad debt expense before. Exam, you can see it either way. I might give you gross accounts receivable with the with the allowance for bad debt, or I might give you net accounts receivable. Okay? And again, the point is to make sure that you have these basic relationships under your belt. Sir?
So if that was just accounts receivable or gross accounts receivable, then we would subtract bad debt expense out of it?
Correct.
Okay.
Correct. And we're not doing that because that's taken into account.
Right.
Right. And the reason that the examples are a little off is because in either case, these are both under the operating section. With your property, plant, and equipment, your depreciation's under operating, property, plant, and equipment's under investing. So we could have that discussion, which we won't have, but we could have that discussion. Okay. Other questions? Other questions?
So
Oh,
to make sure
yeah.
I got it, so the same amount, it would be the same figure, the bad debt expense that we would have taken into account on the income statement, had that not said net, we would still be putting the same figure on there, is that what you're saying?
Well, it might not be because your accounts receivable might have gone up and down, because we're adjusting the credit sales. So let's see, what we said was, if assets went up, then cash goes down, which is exactly what's happening right here. So our cash goes down 92.67. So far, so good? Yeah.
You just subtracted 2008 from 2007 right there?
Correct. Other questions? Okay, next one is inventory. Okay, we already have this formula in here, so all we need to do is copy it down. Everybody with me on that? Okay. What's next? Property, plant, equipment? No, because that goes under the investing section. So are we going to put anything else under operations? Remember, operations are current assets and current liabilities. Investing, long-term assets. Financing, long-term debt, and equity, basically. So given that, we would also need to include accounts payable, and they would go the opposite way. Okay, so up here we're doing AH minus AG, so down here we will do AG minus AH. Okay. This is exactly what you saw on McDonald's annual report yesterday, except it was more complicated. Anything else? What about short-term notes payable? Well, they are a current liability, but are they normally part of your operating activities? No. Okay. So for that reason, we will put them down here. Okay. So Excel trick, while I'm here, I can just copy the formula down and then cut and paste it down here. Everybody with me on that? Because notice, I see a couple puzzled faces. I'll back up. Okay. Okay, so like I told you the first day, one of my goals for you, one of the things I want for you is not just be able to do the calculations in Excel, but become a little more efficient in your calculations. So in that sense, time will be an issue on the exam. Now, I don't mean that to imply that the time is going to be such an issue that you're going to be on here rushing like that. I don't mean that. what I mean is something that should take you 5 minutes, shouldn't take you a half an hour. That's what I mean. Okay. So, just a little Excel trick. The first thing I'm going to do is, when I copy the formula, it's a relative reference, right? So this formula here was saying copy rows A16, right? Well, all I need to copy the second row, which is A17, so I'm just going to copy it down here temporarily, so the formula moves. With me? Okay. But the next step, when I cut and paste it down to here, the formula does not change. When you cut and paste it, the formula here is the exact same as what it was here. Okay. Philip?
Going back to the accounts payable, wouldn't that be, add back because of the decrease in the prior year?
No.
No?
Wait a minute. Double check that. If accounts payable go down, then cash would go down, because you're paying your payables. So this is correct, right? Accounting majors double check me? Yeah. 'Cause if we had paid off, 8,100 of our payables went down, our cash would have gone down as well. So I'm sorry, what? Well, you can do it a number of ways. I was using keystrokes, like I told you guys. You know, I always try and keep my fingers on the keyboard whenever I can, so that way I don't have to fumble over for the mouse. You can do it a couple of ways. Whoops, assuming I get it right. For you guys, since you're probably not using Lotus transition navigation keys like I do, Control-C. Control-C would copy it down, assuming I can get there. If you wanted to do it what I would consider the long way, use your mouse. Okay. And then if you're doing the next step, you can Control X. So Control-C would be copying it, Control-X would be cut and paste, cut and paste. And to paste it, I'm just hitting Enter. X, as in X-ray. Other questions? Okay. All right, best practice of spreadsheets, let's label it before we forget what it is. And notice my abbreviations. Okay, so that pretty much takes care of our operations. So I use the sum function to add all that up. So far, so good? We will be doing this a week from today. By the way, it may be a little early for this question, but just for my own curiosity, you will be the earliest you will be able to take the exam is right after class on Wednesday. How many people are planning on doing that? Okay. That's fine. And there'll probably be a couple more that add to that. I'll mention it then as well, but when that day comes, come down here and I want to walk over with you because I want to make sure that the exam gets started right. I'm always, with the computer exams, I'm always nervous that there's an issue because I did have an issue one time. So I'm always nervous of that, doubly because we're moving to Canvas. So let me walk over there with you.
I just have a quick question. So on that day, like, is it gonna be any new material? You know, so let's say you're gonna give a new material and it's gonna be.
On Wednesday, you mean?
Yes, and it's gonna be an exam, so that kind of.
Let me, potentially, but let's talk about that on Tuesday. We'll see how far we get on Tuesday. And
So I mean, if there's new material, I won't be able to take it, but if it's.
yeah, it's gonna depend on how far we get at that time, so. And that's, unfortunately, that's the nature of the summer semester. You know, I would much rather do this once a week over a normal semester. Every day is tough. Okay, other questions? Other questions? Okay, investing section, what are we gonna do here? Someone other than Justin. Investing section. Yeah. Okay, gross or net? Gross, because we have depreciation expense already accounted for right here, which is the change in our, accumulated depreciation. So we're just gonna do gross here. And we know that if that goes, PPE, we know that if that goes up, our cash is going to go down. Anything else in investing? No, our patents would stay, our patents have stayed the same, so we're okay there. If they had changed, then we put them in investing as well. But they're the same, so we don't. If you want to put patents in here and zero that, yeah. All right. And then financing, we already have our short-term notes payable. Anything else? Yeah, our long-term debt would be in there. In this case, it stayed the same. Our common stock would be in there. In this case, it stayed the same. So I think we're okay. But, and you can see how, particularly when I get down here to APIC, you know, this, I mean, statements of cash flow get very complicated. Okay? I think they're a useful source of information, which is why I want you to understand just the basic relationships of them. But I mean, in public accounting, every tax season we would get headaches trying to put these things together and make them come out right. Okay. All right. So all of that gives us a change in cash of drop of $11.99, and that should reconcile with what? Cash. Yeah. If we simply look at our change in cash, it did in fact go down $11.99. So that's what we would have in here. Beginning cash is this. Test-taking technique, rather than just plugging in your ending cash like that, you could do that for presentation purposes, but if you made a mistake and your statement doesn't balance, you're not going to catch it. So, exam technique, using mathematical formula wherever possible, throw that in there and make sure it matches your ending cash. And all of that is what I have over here for the answer. All right, questions about any of that? How all that's going to change with IFRS, I don't know, assuming it does change. One of the things with IFRS that from my understanding, I mean, the point of doing IFRS is because we're in such a global economy to make things more comparable across countries. My understanding with the IFRS, the international standards, is countries can opt out. I renew my puzzlement.
Why they want to go to a system in other countries whose economies are failing horribly for using that system.
Well, and in addition to that, I think it's really as simple as we're going from a more objective system to a less objective system. How is that clarifying anything? That's the point of this, all the Enron and all that kind of stuff, accounting scandal. Oh my gosh, we got to make things more clear. We got to make things more transparent. I don't have a problem with that. Okay? But how is going from a more objective system to a less objective system accomplishing that? Now, if they wanted to require both, okay, fair market value and historical cost, I wouldn't have a major problem with that, although it's going to increase audit fees, which just decreases corporate profitability, which decreases corporate value, which would arguably have a drag on the stock market. but you accounting majors might actually make a lot of money. And speaking of making a lot of money, I posted a trade that I just took yesterday. I posted it on Young Investors Club. Did Tony not show up today? I posted a trade I took on Young Investors Club yesterday. I went long 3 pairs of Lululemon yoga pants yesterday. Well, my yoga teacher has, she's like, she buys these things for like $70, and I guess uses them for a while, for about a year, and then sells them on eBay for $400. Because their business model is a restricted model. They manufacture a limited number of these clothing items, okay, and usually they sell out in like 3 hours. And these girls are logging online at like literally 5 in the morning when this stuff is released, because by 7 in the morning it's sold out. Okay, so what I just said was that she's buying this stuff for $70, selling it a year later for like $400. Okay? Pull out your calculator and figure out your internal rate of return on that. So I thought it sounded fun, so I went long 3 pairs yesterday. Not going very well because they haven't sold out yet. Because Lululemon's having big issues. So it's not going so well yet because they haven't sold out yet, but an important part of any investment program is risk management. You can return them in 2 weeks. It's going to take a week to get here. So that gives us a 3-week window. So a week from now when they come in, number one, if they're not sold out, I'll probably send them back, 0 risk investment. Number 2, when they're sold out, she knows, she's a yoga guru on this stuff. So when she gets them, she says, hey, these things are junk, send them back, 0 risk. You can't do that in your stock account. You get in trouble for that. So that's my latest trade. I'm long 3 pairs of Lululemon pants. If you want to know how it works out, either ask me or check the Young Investors website, and I'll be posting the updates on there. So, kind of a semi-serious point on that, though, is investments do not have to be publicly traded securities, publicly traded instruments. Okay, anything can be an investment, and I'm completely serious. She's buying it for $70, selling it for $400. Figure that one out on your calculator or on Excel. Now, change in wealth, we're talking about $400, not $400,000, but nonetheless. Okay.
Where did you do that Lotus thing that was on?
Yes, let's get back to this. Which Lotus things? I did lots of Lotus things.
Where you checked it, because I checked it and I don't like it now. Because when I hit tab, I'm going like all the way across the whole page. And now I can't find how I did it.
Yeah, well, that's under File, Advanced, and Options.
Okay, thank you.
And you go all the way down. Now, I don't know anybody else who uses that. I am not sure exactly what the keystroke is of what you push with tab or how you do. Do you know off the top of your head?
I did it yesterday when you showed us. I was like, oh, let me try this, and I'm not accustomed to it.
Yeah, I have to play around with it. Like I say, I've been doing, the keystrokes that I use, I've been using them so long that, there's no delay between the thought of what I want to do and me actually doing it on Excel, because I've been doing it so long. So it works. I don't know how they got away with that, copyright issues. I don't know how they got away with it, but I'm not letting anybody know about it except my trusted students. Don't say anything. Don't rat me out. Other questions? Other questions? Okay, and then the last one here is this is really the easiest. By the way, before I forget, exam issue. This is very important. Every year I have one person that gets tripped up on this. If you're not that familiar with Excel, pay attention. When you open up Excel, sometimes it opens up kind of weird. And what will happen, okay, see how I have 3 sheets down here in the same file? Okay, well sometimes it'll open weird like that, and you don't see those tabs down there. Okay? I'm telling you, on the exam, there are probably 6 or 7 tabs down there. So don't open up the exam data file and say, oh, the data's not there. No, it is there. That's why I want to walk down to make sure that it opens up. That's exactly why I want to do that, which I already know it does. But that's exactly why I want to do that. So make sure that you're aware of that issue right there. The easy way to fix that is to simply go up here to your maximize button. And it pops out. Like I say, occasionally Excel opens up like that for reasons that are probably in Bill Gates, I don't know. Okay? But they are there because what happens is somebody will email me after they've taken the exam and say, hey, I had to guess on 3/4 of the questions because the data wasn't there. No, it is there. Okay? But that's what happens. Okay? All right, everybody with me on that? Okay. All right, the last one are what are called common size financial statements. First of all, what are common size financials? Yeah, common size are when we're using percentages instead of dollar amounts. Why on earth would we want to do that? Why wouldn't we want to know dollar amounts? Yeah, particularly other companies of significantly different size. Okay, so these are particularly useful, for example, if you go start a hardware store. Okay, it's particularly useful to compare your local hardware store with Home Depot. Okay? You can compare your margins, your liquidity, and all that kind of stuff. Okay, so that's probably the greatest value. Intro to ratio analysis. Be reminded that what I just described is what's called an industry analysis. Okay, so this is actually an intro to chapter 4. Or it's an intro to chapter 4, but a reminder for, I hope, everybody, because you've seen ratio analysis before. When we're comparing ratios, we can do it one of 2 ways. What I just described was comparing the same ratio, well, the ratio at the same point in time across companies, which is called an industry analysis. What's the other one? A trend analysis, where you're comparing the same ratio for the same company across time. So if we wanted to look at our gross profit margin and compare it to Home Depot for last year, that would be an industry analysis. If we wanted to compare our gross margin last year to our gross margin the year before, that would of course be a trend analysis. Okay? Be reminded of that. If you haven't run across this somewhere, just for your information, in academics we call industry analysis a cross-sectional analysis, just because we have to give different names to everything. We call that a cross-sectional analysis. Trend analysis we would call a time series analysis. And if you talk to real statistical people, you'll probably get your cross-section in time series versus industry. Okay. All right, so everybody moving on now? Okay. How do we exam pop review? What's this account called? Don't say accumulated depreciation. Contra asset account. Exam tip. How do we prepare common size for the balance sheet? All we're going to do is express each account as a percentage of total assets. For example, cash is king, and it is also 10% of total assets.
You always do that so fast, Jordan.
That's what I've been doing for a long, and that's part of the point of that's part of the point of this class, is to help you guys become faster as well. That's part of the point of all this. So if you need to ask me questions. I love questions. I'm happy to answer questions. That's why we're here. If I weren't interested in your questions, then all I would have to do is post a video and send you on your own and then test you on it. me you got, what I'm talking about. That's why I'm trying to remember as many names as I can. To the extent I fail, please forgive me. Okay, so we're gonna do that for all of our accounts. You with me? Okay. So if I copy this formula down, I get some weird results. Why? Yeah, and this is what I've been referring to, and let's clean it up right now. It's the difference between what's called absolute and thank you, relative reference. In the formulas, absolute versus relative reference. This formula right here is what's called a relative reference. So this formula right here, C5 divided by C12, really what it's saying is divide the cell immediately to the left by the cell one to the left and however many this is, 7 or 8 down. That's really what this formula is saying. So when I copy it down, that same relative reference goes with it. How do I fix that? Well, sometimes what I need to do to make it an absolute reference is to put a $ in front of either the row or the column that I want to freeze. Okay? So in this case, I want all of these numbers to be divided by this one number. Therefore, I'm going to put a $ in front of C12. With me?
And then you
Okay.
have to go redo it again.
So now, when I copy it down,
You have to put it in front of the 13.
oh, I'm sorry, you're right. Yep.
I mean, the 13.
Okay. The mistake that I made was that I was freezing the column, not the row.
You gotta do both.
No. Because I want the row to move.
The next.
Now, okay. So far, so good?
Except for, I did both, and I got the same.
That's because, right, but that will, we'll do that in a minute.
Okay.
So far, so good? Yeah, the $ in front of either the column or the row, depending on what it is you're trying to reference. If you want to reference them both, then, like she said,
No, but you can change it if you press F4 a few
if
times.
you do F4,
A few times.
oh, yeah, you're right, you're right.
You don't have to.
If you do F4, then it does all of them usually,
That gives you more.
which it isn't doing at the moment, but usually when you hit F4, it puts a $ in front of everything. Okay? And then, like you said, if you keep hitting it, then it'll change it to whatever you want it to. Now, the reason I took issue with what Tommy was doing there is because I also want to copy this over here. Okay? If I had done what Tommy said, then this would be dividing by C12, and I don't want that. I want it dividing by E12.
Oh, okay.
Okay?
Say that second part again, what you just said?
Okay. All right, watch this. This is the correct way to do it. Okay? What Tommy said, I hope we don't take this big on me now, because I'm not. Good illustration. What he said was, hey, I put a $ in front of both of them, and I got the same answer. And that is true. But, for the record, it's hard to type like this. That's why I've got this, I requested the school to have a document yet. It's hard to type like this, so that's why you see some of this stuff. When I copy this over here, then it's still it's freezing the column also, so it's dividing this by that, which isn't what I want to do. I want to divide this by that. So for that reason, I only put it in front of the
And then you
row.
have to change that other one too to get the right number.
Yeah. Okay. So far, so good? Okay. All right, now that we got that, it's easy because we want to do the same thing with our liabilities and equity. Non-issue, I mean, if you wanted to get real technical about it, you might say, well, you want to divide that by that, but that's the same as that always, so it's a moot point. When you're doing these, or when you're interpreting these, pay particular attention to the 100%. Because the 100% tells you what everything is divided by. Okay, so when you're interpreting these financial statements, if there's any question as to what you're dividing by, pay particular attention to the 100%, which becomes an issue on the income statement, which I'll show you in just a second. So far so good? Good workout. So far so good? Okay, and of course we would do the same thing for here. All right, income statement. What do we want to do down here? Basically, no, not net income. Yeah, what we're going to do is we're going to divide everything into sales, or divide by sales. Okay, so notice when we prepare these, intro to chapter 4, review from other courses, when we prepare these, the common size financials are going to give us gross margin, operating profit margin, net profit margin. So, given that, we're going to do the same thing. Right there. Okay. Hit F4, so that automatically put these in there, which actually I don't want to do. Same conversation, because we don't want to do the column.
This is the row.
Yep, just the row, formatted as a percentage. So this, I guess I hadn't thought about it before, but that's an example of where you would need to format something on the exam. Because they'll go in there and ask you what the gross margin is, and you need percentage. Okay. Copy all that down. Again, paying attention to the 100%, and I'm not going to do this to you on the exam, but graduating finance majors / new financial analysts, this 100% becomes important because actually on a real life income statement, everything is divided by what? Anybody know? Not net income. Net sales. So you've got sales and then sale returns and allowances. So actually everything's going to be divided by net sales. I'm not going to do that to you on the exam. Okay, like I said, I'm not going to turn this into a big accounting class, but that would actually be the way you would see it on real life income statement. So again, moral of that story being, pay attention to your 100% because that's an important piece of analytical information.
Yes.
And we can go in here and get rid of these. Got rid of the lines because it's copying that format over. And there you go. Okay? Yes? I just copied and pasted it. Yeah, because it's all the same, so just pick whichever one. Yeah, because again, the numerator is a relative reference, The denominator is the absolute reference, so it's cap out. Other questions?
How'd you get rid of all the lines? What'd you press?
This, in the font area right here, yeah, you've got these borders,
Yeah.
so you can do all sorts of things. So something that I use a lot is this, so that's putting a grid around all of them. Something else that I use a lot is this, which puts a thick border around. This, and you'll see this on some of my spreadsheets for like input areas and output areas. I'll use that thick border to really delineate that, in addition to some color. So forth and so forth. Other questions? Yes?
On the exam, do you recommend that we go through all the spreadsheets before we start looking at the questions and
Yes.
fill them all out?
That's just what I was getting ready to say, is that, a reminder, exam instructions, prepare balance sheet, income statement, statement of cash flow, and common size, just off the top of my head, okay? So you spend 15, 20 minutes doing that, and then answer, in this case, probably 6, 7, maybe 8 questions on that. And yes, I would recommend that you prepare them first, because the nice thing about accounting is your balance sheet has to balance. If your balance sheet doesn't balance, you know you're not right. Now, just because it does balance, doesn't mean you are right, because you might have some things misclassified, but if it doesn't balance, you know you're not right. So yes, I would most definitely recommend doing it all first, getting everything done, and then, go from there. Now, when I say done, I mean, if I were you, what I would probably do is, like on the income statement, for example, I would just dump all the revenue and expense accounts in there, and just look at the total, and use that, and then, if I ask you a question, calculate operating profit margin, then you go do it that. Not a great example, because like you saw at the beginning of this, I have question marks in there, so you kind of got to figure that out anyhow. But my point is, the first step would be to get everything to balance. The second step would be to make it look good. So get it to balance first, then look at the questions, and go from there. But, I mean, I'm telling you what to expect. What are current assets? What are long-term assets? What's your depreciation expense? Okay. What's your gross margin? Gross margin for 2008 would be 42%, et cetera, et cetera. Okay. How would your profit margin change if sales change? How would everything change if your debt went from 90 to 100,000, from 90 to 200,000? Because remember, we got 4, and the reason I would do all that stuff is to make sure that you're using formulas. Because if you're not using formulas, you're going to have to go back and figure out where you didn't use a formula, and that might cause you to get into some time issues. Other questions? Other questions? What's that?
I changed sales to make sure that all of them changed.
Did they all change?
Yeah,
Outstanding.
yeah.
All right. I guess we can start with homework. See how far we get.
I thought that was.